Hi, I'm Ryan Hummer, CEO of NCS Multistage. It's my pleasure to introduce you to our company. Our company was founded approximately 15 years ago. We're an energy technology company, and we provide the technology, equipment, and people to help our customers, the oil and gas companies, drill and complete their wells more efficiently. We work for customers that are well-known, such as Shell, Exxon, and Chevron. We also work for a number of smaller, independent oil and gas companies. And we compete with and we can win against companies like Halliburton, Schlumberger, and Baker Hughes. I'd like to walk you through a few slides to help provide you with additional information on the company and our value proposition and the investment proposition around NCS. I'm happy to tell you more about our company, NCS Multistage. But first, our lawyers require us to put up a little disclaimer, so please read this. It addresses any forward-looking statements we may make during the commentary. So NCS, what I'd like to say is we are a focused technology. We're a technology company. And what we do is we bring innovation to our customers in the oil and gas field. We tend to focus on specific product lines where we can develop leadership positions across a focused and differentiated portfolio of products and services. In doing so, and bringing these technologies to market, we're focused on helping our customers drill and complete their wells more efficiently and at a lower cost, and capturing value from our customers for delivering that increased efficiency. We leverage our technology to grow not just in North America, but we're growing more rapidly in international markets as well, and that'll be a focus for us over the coming years. We complement this focus on technology and product introduction with what we call a capital-light business model. We focus our efforts on R&D and bringing innovation to the industry, and not so much on earning value just by showing up with a large piece of equipment. And this has allowed us to have a clean balance sheet where we have more cash than debt, and we have a strong history of generating free cash flow and strong liquidity within the business. We're traded on NASDAQ with the ticker NCSM. Our current equity market capitalization is just under $70 million, and our current enterprise value is just over $80 million. I'll now walk you through a couple of the key components and product lines that we have that underlie our technology platform. Our largest product line, and the first product line that we introduced as a company, we call fracturing systems. Through this product line, we find ways to help customers more efficiently drill and complete their wells and recover the maximum amount of hydrocarbons from the wells that they drill. What we look to do is to enable our customers to create what you see on the right side of the page, where when they drill and complete a well, they're effectively maximizing the amount of oil and gas that they're able to extract from each well, and therefore do it more efficiently over time. A lot of the competing techniques that are out there provide a pattern more like what you see on the left, where it really is suboptimal with respect to reservoir drainage and suboptimal with respect to the overall economics to the operator. We do this by selling our customers, which you see at the top of this page, which is a casing installed sliding sleeve. These slides are installed at the customer's wells at precise positions, exactly where they want to place a fracturing treatment. When it comes time to complete the well, we send a service technician out to location with the tool that you see at the bottom of the slide. That tool is utilized to find the sleeve and to shift it open and to enable our customer to place the fracturing treatment into the well. I mentioned earlier that we focus on establishing market-leading positions in each of the product lines in which we operate. This is certainly the case in fracturing systems. We have approximately 25% share of all completions in the Canadian market through the fracturing systems business. Through our history, we've completed more than 16,000 wells with this technology, shifting more than 300,000 sliding sleeves. The next product line I'd like to talk about is Repeat Precision, which is a joint venture that we entered into in early 2017. Through Repeat Precision, Repeat acts as a manufacturing partner for us. They build the components to the sliding sleeves that I talked about on the prior page. We take those components, we do quality checks on them and assemble them in Houston, and then we'll utilize them in our business in the US and in Canada. In addition to acting as a supply chain partner, Repeat participates by selling products to the North American market as well. They introduced a composite frac plug to the market in 2018, which rapidly gained acceptance in the market, and we continue to add technology and work up to increase the addressable market that Repeat participates in. Since introducing the Purple Seal composite frac plug, we've added a technology called the disposable setting tool, which really brings a factory assembled high quality component to the oil field and replaces a procedure that really helps to enhance the safety of the well site and improve the repeatability of the performance for our customers. With the frac plug and now the setting tool, we've recently started field trials of another component, which we call an integrated modular perforating gun. With this perforating gun, it further increases the addressable market that Repeat can participate in and will give us a significant opportunity for growth in the North American market going forward. The next product line for NCS is NCS Tracer Diagnostics. We acquired a business called Spectrum Tracer Services in 2017, which formed the foundation for this business for us. We're a leading provider of chemical and radioactive tracers for wellbore diagnostics and for reservoir characterization. Again, speaking to market leadership positions, based on third-party data, we believe that we're the #1 provider of tracer diagnostic services in North America. We have both chemical and radioactive tracers and tracers that can detect the presence of water in an oil well, of oil in an oil well, and also natural gas for wells where the customer is targeting natural gas. The customers utilize tracer diagnostics to better understand how efficient their completions operations are, but more importantly, to understand the communication between wells that may be placed close together in a well pad. A good example of this is the visual on this slide. In this slide, we've placed tracers in basically every well for the 3 wells in the middle of the schematic. And what you can see with the arrows between the wells are the way that one well communicates with another one. And while this is pretty technical in nature, what you want to be able to do as a customer in the oil and gas industry is to very efficiently fracture the near wellbore area, but not create fractures that are so large that you impact the production from adjacent wells. So through the tracer diagnostic service offering, customers can pump tracers into one well and take samples from adjacent wells to understand if there are opportunities to either optimize the completion design or optimize the well spacing. Through this, if a customer determines, for example, that they can place 8 wells in an area that they were previously planning to place 10 or 12, it can deliver millions of dollars in incremental economic value to that customer through optimizing their field development strategy. The final product line I'd like to talk about is well construction. We have a number of products within well construction, but really the anchor product for us is something we call the airlock casing buoyancy system. And we developed the first economical casing buoyancy system back in about 2014. The primary goal of using a casing buoyancy system for our customers is to ensure that the well that they're drilling, and when they place the casing in the well, that they can get that well bore all the way out as far as they intend to. It's much more economic for our customers to drill longer and longer laterals because they can basically leverage the amount that they're spending on the vertical section of the well by increasing the horizontal distance as much as possible. The airlock casing buoyancy system helps them to do that. And by ensuring that they get casing to bottom every time, then they can have access to the entire reservoir that they're targeting. Again, we've built upon this airlock casing buoyancy technology with a couple of other pieces of internally developed technology, including a liner hanger and a toe sleeve. And we do go to our customers looking to sell an entire wellbore full of well construction equipment, which includes our proprietary products, the airlock, the liner hanger, and the toe sleeve, together with some other equipment that we view as being more commoditized and that we purchase from a third party and package into our solution. On this slide, what I'd like to do is talk to you a bit through the journey that we've been on as a company. We went public in 2017. So we look at 2016 as the baseline. So in 2016, over 90% of our revenue came from fracturing systems, with just under 10% through well construction, and that was primarily the airlock casing buoyancy system. Through the Repeat Precision joint venture, the acquisition of Spectrum Tracer Services, and organic growth, we've been able to grow our revenue by approximately 60% since that time and grow our customer base by nearly 50%. In the meantime, we've also certainly increased the addressable market that we participate in, giving us more opportunities as we move forward and as we introduce more technologies and solutions to our customers. Our business mix today is illustrated on slide 11. From a geographic standpoint, about 65% of our revenue comes from the Canadian market. That's where we initially introduced the fracturing systems product line and where we have the 25% plus market share that I alluded to earlier. After that, the next largest market is the US, just under 30% of our revenue. And international revenue over the last 12 months has been about 7%. Just for some context, the global completions market that we participate in, it's about an $8 billion market, and it's split just about 50% North America with 50% in international markets. So again, for us, as we think forward and how we can take our technology and leverage it to grow our addressable market and participate in more opportunities around the globe, we would expect the international component of our revenue base to grow over time. In addition, we're predominantly a product manufacturing and sales company. So the product sales for us would be the sliding sleeves through fracturing systems, all of the products that we provide through well construction, as well as the composite plugs, setting tools, and now the perforating guns through Repeat Precision. Our service revenue is generated through our Tracer Diagnostics product line, as well as when we're on site operating the service tool that I alluded to earlier for fracturing systems. The primary market driver for our business is oil and gas activity, so the drilling and completion of oil and gas wells. On this slide, what we've presented is the average number of rigs that have been running in the US, in Canada, and certain international markets over time. So our industry was certainly hit very hard with the downturn in 2020 related to COVID, which caused a significant decline in demand for oil and gas, and our customers responded by decreasing their activity. We've since responded quite nicely, but as you can see in each of the US, Canada, and international, activity is still 20 to 30% below prior peak levels, and we believe that there's significant room for the industry to continue the growth trajectory that you've seen over the course of the last several years, and really move back towards those prior peak levels for industry activity. So how has this impacted our business? So again, we looked at the same time frame, 2017 to 2022 on this slide. We expect our revenue this year to be approximately $159 million. That's about a 34% increase from 2021. But again, still 20 to 30% where our prior peak revenue was prior to the downturn in 2020. Similarly, for adjusted EBITDA, we had to make very hard decisions as a company and took a lot of cost out of the business as we responded to the downturn. And that's now starting to pay off as we come through and the industry and our company starts to grow again, where we can put strong incremental margins to the bottom line. So you've seen our EBITDA performance grow from a trough of $2 million in 2020 to $9 million in 2021, $16 million expected for 2022. And we're at the point where in the third quarter of 2022, our incremental margins as compared to 2021 on incremental revenue were about 26%. So with that incremental growth profile, we think we can continue to grow the consolidated margin for the company over the next several years as we continue to grow as a company. I spoke earlier to our ability to leverage our capital-light business model to generate free cash flow. At the bottom of the page, you'll see the free cash flow that we've generated over the prior 5 years, which is in excess of $60 million. For this year, with the over $40 million in revenue growth, we are making investments in working capital as a result. So we expect to be slightly below break even on a free cash flow standpoint this year, but would resume to the traditional free cash flow profile going forward. So with all of that, just want to reiterate the value proposition for NCS that we bring to our customers. We are a leader in what we do. Customers have significant confidence in us to work in the most challenging wells that they have and provide solutions that add value. We continue to innovate. We have over 105 patents, and that number is growing. And we leverage that technology with our customers in North America, but it's also helped us to start to penetrate international markets. And with the strong balance sheet that we have and the free cash flow that we generate, we're in a position to consider options for what to do with that free cash flow going forward, whether that would be some sort of a return of capital to shareholders or to utilize that cash for inorganic growth opportunities to help consolidate the industry and help us grow even faster. And again, as I spoke to earlier, we have an $83 million enterprise value, as you see on this slide. We expect to generate 16 million in adjusted EBITDA this year. So really a multiple of just over 5 times current year adjusted EBITDA, which we think provides investors with a very compelling opportunity to invest in the oil and gas sector, which is strong and growing right now, and has strong supply demand fundamentals despite potential macroeconomic headwinds. But then to beyond just investing in the sector and the industry growth, participate with a company that's introducing new products to the market and has significant leverage in that growth to put additional profit and cash flow to the bottom line. So we think it's a very compelling time to invest in our company. And I thank you for your interest in NCS.